Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. My apologies if it's too loud and I blew your ears out, but I always like to start the show off with a big bang. And I suppose at some point down the road we'll get into like formal, fancy schmancy intros. I don't know when we'll get around to that, but anyway. Today is Thursday. You're probably, I can imagine a few people are kind of like, oh, it's this clown. We wanted to hear from Julian. But this week's baby powder report been put on hold. Unfortunately, Julian is feeling under the weather, and it does happen. So here I am. If anything, maybe you'll get an extra baby powder report in the coming week or so. I haven't really prepared too much here this morning. I see there's nobody on YouTube page watching this. So I guess we don't have to worry about screwing up if nobody's watching the video. But anyway, here we are. Happy Thursday. I'll try and summarize what I'm seeing in the market in about 20 minutes, half an hour or so. Send you good people on your way, and hopefully you get some value out of this rant. Anyway, looking at the dashboard, I think this message about the stock market is fairly accurate. Hey, there's somebody over on YouTube. There's one person. Woohoo! Yay! One Alaska. Hello, One Alaska. Well, I hope you're getting good value out of this rant. Looking at the dashboard, and I always like to start my day with just sort of a quick boo of what the algorithms we have built are sort of telling us. You can see, interestingly enough, the S&P 500 has come out of overbought zone in the fast indicator. Slow indicator still sloping up, so at best, what'll end up happening if these cross with this current situation is a weak sell signal. And we're not really overbought, so if anything, I wouldn't be surprised if there's another push to the upside here shortly to get everybody overbought. And then if we do actually get a big fat sell signal in the market, we'll get a nice little M top here in the indicators and a crossing and et cetera, et cetera. Also, too, if we look at the histogram, you can see country funds are egregiously overbought in the short term. And I am noticing relatively bullish commentary coming out of Europe, I think on balance. I always like to check in with these guys. They have a pretty good quote board. You can see, what's that? Spain's up nicely. Italy's rebounding nicely. Remember, Italy got wiped out there yesterday and the day before. France and Germany are both up. Germany actually had some econs come out that were relatively positive. If anything, you might even argue that because of Vladdy over there in Eastern Europe, things were kind of artificially skewed to the downside last year. So any kind of year-over-year sort of normalization out of the European economy will probably beat estimates. And actually, it's interesting. Like a lot of data sets that you're seeing right now. They just went through an absolute wild gyration through the sickness there, and then of course with Vladdy's wonderfulness, and now you can kind of see the data sets are trying to stabilize, and they're probably going to sort of try and go back to sort of quote unquote normal, whatever that is. So we got the Dow down 20 points. NASDAQ's actually up 70. Remember, we saw the NASDAQ got punched in the nose here a bit recently. We are in the first 2 weeks of the what are we? I guess this is the second quarter of 2023. So we do have to sort of take with a grain of salt what we're seeing in the marketplace as sort of an initial indication of where the fund managers think the economy is. But at the same time, too, you have to let this full sort of week, 2 weeks play out. And if I'm not mistaken, tomorrow is a holiday. So things should probably be pretty quiet in equity land. So we're probably going to see a little bit of sort of, almost even front running a little bit, sort of what those fund managers are thinking. So for the first week of the quarter, Let's see, do we even have enough data? So there is the 3rd through the 5th, which isn't really much. That's Monday, Tuesday, Wednesday. We should count today into the data set because tomorrow's a holiday. It's kind of a short period for reporting. I'd almost be inclined to just let this first full 2 weeks play itself out. We did have at the very end of the last quarter a huge surge into technology. And actually, you can see it right through the whole quarter's data. If we just go something along these lines, see if I can quickly do this. All right, so huge surge into tech, communication services, discretionary, and real outflows out of everything else. So that sort of implies, full recession, market bottom. The question ultimately here is, does the Fed actually cool it on raising interest rates? The long end of the curve just continues to rally in the U.S. bond market. So if we look at things like the bonds themselves, this is basically your interest rates. If these prices are rising, then it means yields are falling. So you can see it's just been a long, slow, relentless grind higher. Even if we look at like 4-hour charts, you can see the longer end of the curve is really moving up smartly. Short end of the curve's not really moving too much. And I think that's what everybody's sort of, waiting for is when is the Fed going to finally stop raising short-term interest rates and the curve actually go back to normal? Because right now the curve is still very, very inverted. So that's the big $64,000 question right now is when the heck is the Fed going to say that they're done raising interest rates and actually start dropping interest rates? With this recent, sort of problems in the banking sector, they are saying that that in itself will act as a big sort of almost like a 1 full percentage increase in short-term interest rates. So it'll be really interesting to see how the Fed acts here going forward. Mr. Williams, a fan that I am, he puts out videos on stockcharts.com, but I've been watching him for years. He believes that, in essence, as soon as the market's been given some sort of message from the Fedsters, that indeed they feel like they've gotten in front of the inflation curve and they can actually start sort of thinking about, well, that's it for interest rates. They're not going to go any higher. Maybe even think about lowering rates. Then he actually expects the stock market to take off like a rocket. I will say that this is a disturbing image. The entire financial services sector, and of course you saw what happened to SVB and all those kind of people. Their long-term bond holdings, the prices of them have collapsed. I think they got themselves caught in what's called duration risk, and that's just poor risk management on their part. But I wouldn't be surprised if there's a lot of financial services industries that are in the same sort of situation, where they're having to borrow at fairly high interest rates on the short term. They're lending out to the public at lower interest rates over the long term. That basically guarantees losses for them. So we'll see, is the Fed actually in some sort of wiggle room? The interesting thing about what we're seeing out of the econs is I think that you're actually going to start to see the Europeans now start to talk about, hey, well, the economies are finally coming back. We can actually think about raising interest rates to the point where we can bring European inflation into check. So you might be seeing that we actually get sort of a passing of the ball from the Americans having really, really high interest rates to the Europeans now having high interest rates. We'll see how that goes. Only time will tell. As for sort of the stock market topping out, that kind of idea, we are now into April. And of course, the old adage, two things, if you don't know them, probably a good idea to write this stuff down. Number one, buy when it snows. That's usually like October, November, December. And sell when it goes. And that's usually North America. That's usually like, April, May. Maybe even late March, but early April, definitely into May. And then the old cliche in the commodities industry was, sell in May and walk away. And that's just simply a function of commodity prices themselves used to dominate our society, not so much anymore. But if you were a commodity user, like in the say the construction industry, you didn't actually start using the actual commodities until the ground thawed, and you could actually start getting to work and digging foundations and stuff for construction. So usually what would happen is in industry, the first quarter and even into the second quarter, you would find that, say, construction companies would start ordering all the basic materials that they need to build houses and bridges and buildings or whatever. And they would all be delivered by April, May, so that as soon as the ground thawed, boom, they can get to work. But that means that they've done all their purchasing. And once April, May rolls around, they're probably not going to do a heck of a lot more purchasing, as they've already got everything that they need for the coming construction season. So any way you put it, I guess it shouldn't surprise us that we see markets up top here. We haven't got any sell signals, and I don't see anything at like egregious levels here yet. It is interesting to see currencies starting to work their way up on the medium term. Maybe the US dollar is getting a little bit beat up here. But nothing really on the medium term is flashing. Warning, warning, Will Robinson, warning. So yeah, we could probably still go a bit higher here. Looking, and of course, interest rates themselves. If interest rates are falling, then generally speaking, equity investors should feel a little happier. It's interesting, you can see equities did start the day off pretty sanguine on a pretty negative note, but we have jumped up smartly here just over the past couple hours. And also, too, I noticed things like Bitcoin actually spat up like a 30-minute buy signal there. Still lower time frames. I suppose we can talk about Bitcoin in a moment. But the whole risk on market is catching a bit of a bid here this morning. We'll see how long that lasts. But I suppose, and actually, there's that European sort of, hey, things in Europe are looking a little bit better. So in comes a W on the intraday charts there on the euro. And you can see the US dollar's kind of floundering here and breaking down a little bit. So with that said, well, hold on a second. I didn't want to do that. Day trading. I still get the impression that we're in a bit of a kind of no man's land right now. This happened to be the NASDAQ. Of course, I do this on the S&P 500. Always start my day with like a good 4-hour chart. We're having fun doing Tesla 4-hour charts recently, but for the purposes of talking to the public, I think it's probably better to just work off of these big fat round number charts. We were right down at the lows this morning, and it's kind of like we're in wishy-washy land. We did a 50% retracement of this range, and taking a trade at the middle of the range is never really a good idea anyway. So anybody who came in here thinking short, down, 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 boom, they just got punched in the nose. As you can tell, red boxes, green boxes. This is basically what I teach the level 1ers to try and concentrate on trade location. We did have a gentleman on the site, and actually, anyway, he wrote this really cool script using ATR. I like to use ATR as sort of a gauge as to what sort of and it just simply stands for average true range. So what would be an average move for the market on a daily basis? Interesting how ATR right now is lining up nicely with this previous high, and ATR is lining up with this hammer candle low. So you could make the argument there's a bunch of trap bears in this tail. I noticed Chris made a short video of my rants about wicks and tails the other day. So, I would be willing to bet that there's probably some buyers that would love to cover their shorts down in here. And this wick up top here, interesting how that also aligns with that level there. And, that basically is right up against that ATR level there. So, if I was going to be hunting trade location in the stock market, I would be like, okay, I want to hunt shorts up here, and I want to hunt longs down here. Or just make it simple You know, I try to make this as simple as possible for everybody, but just think I'm going to hunt short trade locations at Brian's favorite fib up top here. And I'm going to hunt long ideas at Brian's favorite fib down here. And it's not a bad roadmap. You know, somewhere down in here would probably be a good place to look for longs. Somewhere up here would be a good place to look for shorts. And right now, if anything, if you believe that this is the top, and I don't really believe it is, because usually they say, you know, this is a V top. We went up to new highs and then we just went straight down. Usually V tops need to be tested, and if it is a real top, it'll look like an M, and sometimes actually it looks like a 3 lower highs if this is really a top. So if anything, we should have expected some sort of counter trend rally. You know, speaking of wicks and tails, this wick right here, right into the reload zone, that probably also will be an area where there was a bunch of guys who are long from that level. They would love to get out, so we're probably going to find some resistance up in that area as well. So you can kind of see dead cat bounce right back to 50% levels. If anything, we're playing the 50% level ping pong game right now. So 50% doink, 50% doink. Really what we'd like to see is an M or a W in either direction, and right now we just don't have that. So in the lounge this morning, I was just sort of like, you know, I don't really have any acceptable trade location. This is on the NASDAQ. Somebody on the NASDAQ was asking specifically about this chart, so that's why I happen to have it this morning. Same sort of thing on the S&Ps. We are into a higher time frame. If I'm looking at like the daily chart, we are into a very interesting trade location. But remember, VTOPs usually need to be tested. We've come down, made lower lows here. It's not really anything uber bullish. We just had a dead cat bounce because I think, if anything, this is kind of a really crappy trade location, and they're just going to try and flush out as many weak hands as possible. So, you know, there is your S&P 500 image. And it's kind of the same logic. You know, there's ATR sitting up around these highs. And there is a couple tails. And there is ATR around this tail. So if I was thinking trade location, where to hop on, where to hop off, I might be interested up top here. I might be interested here. But where we are right now, this is like no man's land for me. Gold market, you know, we are into interesting resistance levels. Still have this foggy buggy floating around up top here. I get the impression we're still asking whether we really want to resolve away from this 2.618. It looked like we were heading up top here, but then we kind of stalled out, then right back to foggy buggies. Inside bar, but just really messy. And also remember too, tomorrow's a holiday. I don't know whether Monday is a holiday. It's kind of, you know, this is an Easter break. It's a little bit messy. So it doesn't surprise me a lot. You're not going to find a lot of people, especially now we're getting on in the day. There's probably not a lot of people that are going to be putting on new day trader positions here going into the weekend. And then crude's still trying to figure out whether it wants to do a gap and go. So this is a pretty old concept. Think of this as like a bull flag, where the gap itself is actually the flagpole. And if we consolidate and we accept this level, then we should theoretically go A, B, C, D up into these highs up top here. And you can see the market is really humming and hawing. And interestingly enough, we drew a trend line off of the recent peaks in this. This happens to be the May crude oil contract. I get the impression this is a pretty important level for the market. So you can see not once, not twice, not 3 times, the market has come back to this level. It's wanted to punch down, and it just keeps finding buyers down in this area. But at the same time, too, if you think things like horizontal support and resistance, and of course, you know, institutional fingerprints, which actually I did talk about a little bit last night in the crypto show, it doesn't surprise me that there's a bit of a fight up here. And $80 a barrel, that's not a terrible price for crude. Also, too, there is technically the sort of oil Oil tanker insurance embargo. I'm not quite sure how you describe it on the Russians put forth by the Americans and the Europeans. Maybe that's I wouldn't even be surprised if there's some lobbying efforts that are kind of like, okay, look at, we died 1,000 deaths for like 6 months. Now you've made your move to natural gas. Maybe lighten off on the pressure here, and so as a result, they've kind of boosted the price above that $60-$70 area that the West kind of wanted to limit Russia revenue. I suppose also too, it kind of looks like, and this is just pure conjecture, but it does kind of look like the sort of forward push by the Russians has been sort of stalled out, and so if anything, people in Western Europe and anybody who's sort of empathetic towards Russia is like, hey, it doesn't look like they're winning, so maybe cut them some slack a bit. I don't know. Anyway. So I would expect this to move a bit higher. Also, too, remember, this is a pretty typical seasonal trade. It should go buy your unleaded the middle of February, sell it the middle of May. You made money 9 out of the past 10 years, right? So there is the middle of February. And here we are. We're now the middle of April. You can see where ATR wants us to go. We could probably do just simple things like bombs off of this big honkin' W here. My hunch is this is 2.618. Since we've resolved above, we probably want to go to 4669 now. Oh, interesting. Okay, so 2.618 still has not been hit, so I think the market needs to hit this. And if it can resolve bullishly following that event, maybe into that April sort of holiday weekend, maybe we get a bit of a stalling out here at this level. I wouldn't be surprised if it were the middle of May and you see this darn unleaded gasoline all the way back up top here. It wouldn't surprise me one bit. Probably if we do a bomb off of this bottom, you find that 2.618's been traded to. Where are we? Something like that. So yeah, there's the 2.618. We've consolidated. We've moved higher. So 4669. I wouldn't be surprised. $3. That's probably a half decent target. And the commodity brokers, they'll be happy. They got their seasonal trade-off. I suppose. What time is it? Yeah. Okay. So we'll wind up with a quick boo at crypto. We were talking last night, and again, remember in crypto, the backdrop is 3 dojis on the weekly chart in a row. That's quite remarkable. You don't see that every day. I mean, just go back and look in your charts and see how often you see 3 consecutive weeks of dojis. In fact, I to be honest with you, being in crypto, I can't remember the last time I saw 3 weeks of dojis all in a row. So this is making an interesting price pattern here. We might even start to get to the point, and not just do this for fun. Do we have a monthly doji starting to form here? It wouldn't surprise me. And what the hell do you do with a monthly doji? Oh, look at all the crazy buys and sells here. Okay. All right. So do we have a monthly doji? Both. Not yet. It's not a monthly basis. Interesting. Actually, last 2 months ago was a doji candle. Right now, still technically an inside bar on the monthly basis. So nothing really to get too excited about. If anything, what I see here, and I guess it kind of makes sense, is this is a hugely significant pivot level for the market on a monthly basis. So, not a big surprise. Running into a bit of traffic here. Can't really make out a heck of a lot else. I know Paul, he was very interested in following these monthly and yearly charts on our crypto shows that we did. Suppose, we could probably horizontal support and resistance. That is that old sort of pre-last cycle breakout level. And is the market just basically range bound between these horizontal support and resistance levels on the monthly chart? I get the impression, and I also too get the impression if we can resolve up through here, then the old expression, what once was resistance, can actually turn into support. So this is an interesting level that we're sort of stalling out here on this weekly basis. Call it maybe like a line in the sand, if you will. I still like the idea of us pushing higher here into a lot of technical objectives. It's just this is not the week for that to be resolved. This, unfortunately, and I kind of made a reference to it recently, this is now looking at the 30-minute chart. It's interesting how we had this bearish bot working, move stop to scratch. We've rallied right back up into sort of the scratch level where you entered it. So this bearish bot, I think, is now off the table. As well, Chris even pointed this out this morning, that you can see we did come down and tag Mountain Man. It's a little bit high of a price for where I'd like to see this bottom come in. I think this is probably a function off of this original market structure trend line. So you can see, remember the other day we had social media influencers come in and dump the price into that trend line. Market actually did not close below it. Really, really good example of why you don't want to take a trade out of trend line. If anything, any kind of bullish reversal out of there got you as a buyer down there. As you can see, I had a little day trade working here that I got stopped out on the break of these lows because I just, it's my plan. Don't take risks I don't need to take. You could make the argument there was a really nice little M top that came in here just a day or two ago. That led to this sell-off. We came down. I think we even tagged 50% levels pretty nicely through that move. There is the 50% level, so not a big surprise. It wasn't a huge trade, day trade kind of purposes. But this morning, we had noticed, kind of like what I made reference to, the whole equity and risk market caught a nice bid here through this morning, and that also happened in the crypto markets as well. So I wouldn't be surprised if there is position squaring heading into the weekend. I suppose you could probably make the argument. Of course, crypto doesn't sleep 24/7. Crypto kids will probably have a pretty good week of it, unless there's some sort of, CZ FUD out there. But, I kind of see something along those lines. So interesting how our previous bullish bot would have taken us up into here. I've got one low, I've got two lows. The only problem is I think that this has gone beyond. Maybe it has. Oh, man, too many studies on here. I think I got to get rid of some of these. All right, so if we go from the high back down to low, there is 66. Ooh, very close. That's sort of like how long have you been working with these tools, and do you have confidence in the actual setups? Gnarly old veteran trader, I wouldn't have a problem if he said, well, I got 3 higher lows, so I'm ready to go long. So something along those lines. We have now a double bottom. And as I had pointed out, Chris had pointed this out when he saw it come in. So hats off to you, Chris, for having laser beam eyes. And oh, what a coincidence. The double bottom now is basically right off of this bot level. So is a long trade setting up here into the weekend? Well, maybe. And this, of course, is all contained in the context of, interestingly enough, if this bot plays out, all we're going to do is just revisit that crazy-ass wick high that we saw on Stamp there, 2 or 3 weeks ago. Sort of continually stuck in this narrow sideways channel. Considering tomorrow is a holiday, this candle, of course, doesn't close until Sunday, we might have a nice big rally right up top, test this high again, and then, maybe a meltdown right back to these levels on Sunday to print that weekly close. So, I suppose the good part about it for the crypto kids is we were sort of pointing down and things were looking ugly. At least now we've got a bit of a bottom working. And momentum is starting to perk back up. We've got W's working in RSI studies. In fact, actually, too bad Julian isn't on the call today. I'm sure he would probably have some comments about that. Looks like Willie's put in a pretty wide double bottom there. The MACD has gone in double bottom. So, if anything, it almost feels like the selling pressure has abated and we can all breathe a bit of a sigh of relief right now. If you did want to join this, I don't know if this is appropriate for the free call. Maybe what we'll do is in the after party, we'll dig into this a bit more. But I wouldn't be surprised, candle body lows for trade location. That might be an interesting level on a test of the trend line again. Or this might be an interesting level. And then, of course, are these in reload zones? Where's Brian's favorite fib? All that kind of stuff for trade location. So, RLZ, oh, what a surprise. That's Mountain Man, and that is the midpoint of the reload zone. And there's Brian's favorite fib right against those tail lows. So, keep your eyes peeled. Like I said, we got one low, we got two lows. Ideally, I'd like to have a third low come in here for the bot. But having said that, the market will do any old damn thing at once. I don't know whether I really like the risk profile of buying that there and having to risk down to the bottom. If anything, I want one more test of these lows to really prove to me that, yep, this bottom is for real. We'll see how that goes. Let's put the target out here. What is that? That's 29 and change. We'll keep that in mind. I mean, it looks like the market wants to work its way up. So aggressive upside objectives. Awesome. Let's shoot for 29. In Shultcoin land, it was interesting. First thing this morning when I loaded this up, just a sea of red. But it does look like we're getting some green coming back in, so bids are coming back. I'm acutely cognizant of the CZ FUD factor, and I actually even put out sort of tweets and stuff this morning that if this market's gonna break, I actually can see the trade developing. So, this is the down BTC proxy over on Binance. But, I mean, it's kind of like if you were playing the down proxies on FTX, over on FTX, and then FTX blows up, does your trade still get honored? I don't think so. So I don't know whether it's a good idea to take a down bet on Bitcoin on Binance, if, of course, the Interpol puts out an arrest warrant for CZ, blah, 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 all that kind of craziness. But, you trade this stuff where you trade it, but you can clearly see there is a potential. You can see she tried to W out here a week or so ago, and it stalled out. It could not get above the moving average. Now here we are again. So, if Bitcoin's going to top out, and we are going to, basically on the daily charts, we've got these, this is the 4-hour, but you've heard me talk lots about this megaphone. Do we M out here? Right now, we're just stuck in a trading range on the lower time frames. Probably going to drive a lot of the new people to this space crazy. Here's the daily chart. Does this market actually start smiling at it? If it does, and we start breaking down, then I could very easily see if you're looking for a way to play that down move without actually shorting Bitcoins, this is probably one way to consider it. But my hunch is the reason why Bitcoin craps out is because, of course, everybody's freaking out because Binance is about to explode. So, caveat emptor, welcome to crypto. In fact, I think that's even the tweet that I put out was, oh my goodness, this crazy space. So I even said here, very unpopular note, there is a W potentially forming in the down Bitcoin. Does it crap out because of CZ FUD? And if Binance blows up, would they even respect your trade or not? I have no idea. So anyway, there's your market. Okay, I think we'll probably leave the summary at that. Sure hope you got some value out of all this. It does look to me, number one, looks like the bull down Bitcoin vote is backing away. You can see we got a nice big wick there now. The lower time frames, all you lower time frame traders, it does look to me like the market has stopped that slide that we had going yesterday and has put in a bit of a double bottom. If we could get another pullback here into support and then a turn back up, yeah, I might just jump on a long setup here. And actually in altcoin land, like I said there a second ago, I am seeing some more green come into the space. And I've said this repeatedly, as long as we keep seeing candles that look like this, I mean, somebody's buying this. And then also, too, when they're going to be selling, they're probably going to be selling into Bitcoins, which means that there's going to be demand for Bitcoins. So as long as we keep seeing these kind of markets and these kind of crazy-ass pops, then I don't see the market breaking right away. So anyway, keep your eyes peeled. But like I said, there is more green coming on the screen. And it's just really a question of going out and finding the W's as they're coming in on momentum and hopefully on volume and just getting in there and having fun. If anything, see if you can check out the video that I posted last night on the cryptocurrency. I think it was yesterday's daily brief. We went through a whole bunch of names and talked a little bit about levels and, if you were going to buy, where you might want to consider working some bids. So there's your summary for Thursday. Tomorrow is a holiday, so I don't know whether we're going to really do a video tomorrow or not. But knowing Brian, I'll be at my post. I don't really do a lot of the religious stuff. Hey, look at that. Our little EOS is breaking out. I mean, is this thing getting ready to pop here? There's no moving average resistance now. All somebody's got to do is sneeze, and it'll turn into one of these crazy ONT trades. So it's almost the same image, right? This ONT, that EOS, looks exactly like this thing looked like here just the other day. And then all of a sudden, kapow! So that's the kind of market that we're in. So, all right. Anyway, have yourselves a great day. PMA for the win. We'll do, I guess, a daily brief after party. I'm not quite sure what we'll talk about today. And by the way, if you enjoyed the trading acumen of Grimm and his commentary last week, he said, Brian, and actually he was talking to Chris, he was so well received and people really wanted more. He's decided to come back for another big whack of the Grimminator, the Wookiee, tomorrow. So we'll have Grimm on the after party tomorrow. So other than that, I think there's not a heck of a lot else for me to say. That is a good half hour or so. So PMA for the win. Slow and steady wins a race. Go hunt those W's wherever the hell they may be. Hey, look at that. There's one that's coming in. If you're trading W's, well, just trade the W's, live with the results. Slow and steady wins a race. And of course, as always, if you need help building your plan and understanding how to sort of frame your behavior around this W and how you're going to participate, what kind of risk you're going to take, how do you set yourself up to be able to pull the trigger when the signal actually comes in without being riddled with anxiety, maybe consider joining our education program. So slow and steady wins a race. Also, too, I'm supposed to ask everybody, as always, but I don't think Chris put the message down. No, he didn't. Tisk, tisk. Anyway, I think we're at about 7,500 subscribers. We'd love to get to that 8,000 mark on the YouTube. So please hit the like button. Maybe recommend the channel to a friend. Hit the subscribe. Ring the bell so you get notified when these daily briefs start up. And maybe it puts a big smile on your face. All right. Have yourselves a great day, everybody. PMA for the win. All the best. And bye for now.